Good morning, traders. My name is Bennett Tyndall with TradingAnalysis.com, and this is our Elliott Wave Wednesday live stream. Good morning once again, traders. Good morning, YouTube. Thank you all so much for tuning in. Happy Wednesday, September 2nd. Another trading month. We just closed out the best August on record since 1986, which is really rather incredible if you think about where the markets have come since the March lows, also taking into consideration where the economy stands. But with big tech continuing to perform, it's really no surprise that we see now the communications sector, we see the technology sector well above their previous February high. So we've essentially erased the COVID decline. The S&P is only a few percentage points above its February high, but the markets just continue to act extremely well. Before we get started, let's go ahead and bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you doing, gentlemen?
Hello.
What's happening?
Hey guys, good morning.
Good morning, Alex.
I survived the hurricane, guys. Last week, last Wednesday we left you, I had a hurricane bearing down on me, so we we lived.
I was going to say it's been crazy weather this year, and in addition to everything else we've been dealing with. But so did you guys lose power or anything, or how did that go? I know you had mentioned the generator.
Yeah, we had power down about 9 hours. We're about 80 miles west of where the eye wall was, so fortunately the winds were not much more than about 50 or 60 miles an hour where I live. Lake Charles took it on the nose, though. Cameron, Louisiana, all the communities around Lake Charles, they got the 150 mile an hour eye wall, and it just it looks like a war zone there. So anything you guys can do for hurricane relief, you know, I'll throw one of my favorite charities out there. That's Cajun Navy. So those guys are in hurt right now. Usually they've been over here helping us out when Harvey comes. They go to Florida. They go wherever there's flood and disaster to try to help out. It's a great organization, but they're hurting in their own communities right now. So do what you can for those guys.
Absolutely.
Yeah, but we're blessed. We count our blessings. We're very fortunate. Everything came back up, and no damage in my community. No serious damage. Just maybe a few limbs down or things like that. But
it could be scary. You know, I'll tell you this much. When I first moved to Texas from California, the first intense thunderstorm that I experienced here left me wanting to go back to California. It was pretty intense.
It rains here, yeah. It doesn't rain in California. That's why you have wildfires, and then you got earthquakes to deal with. Oh my gosh.
Yeah, the lightning and thunder here can be pretty intense. It's literally foundation shaking. So, anyways.
All right, let's take it. Yeah, I was talking about shaking. What's shaking in these markets here, Bennett?
Yeah, let's jump into it, you guys. So, as you know, the past couple of weeks we've been tracking the Elliott Wave count in the S&P, in the Nasdaq, and of course in technology with you guys here on the Elliott Wave Wednesday live stream show. And you know, we've been seeing continued signs and implications that suggest we were going to continue into these levels. What you're looking at here in front of you is the Nasdaq 100's daily chart, which we've been tracking. And out of this fourth wave, we're going to go ahead and zoom in on it once again and get you guys down to the 1 hour chart. And you know, last week we were looking at this consolidation out of this fourth wave breakout. And as you can see, we've got orange wave 3 there. Meeting a 200% extension of wave 1. We then have a fourth wave that squares up in terms of the magnitude of correction in wave 2, so that's very appropriate. You've got your standard 5-wave subdivision within the third wave of the higher degree third wave. And now we're continuing to see the markets press higher. Obviously, the story on Monday and Tuesday, the story on Monday and Tuesday was, of course, trading action in Apple and Tesla after the splits. The market was very interested to see, you know, just how things were going to settle there with the splits taking effect. And Apple continues to perform well. You can see the S&P futures are up just over 0.5% this morning. Apple broke through 130 yesterday, just shy of 135. Tesla had a nice move on Monday morning, actually all of Monday. Tuesday in the pre-market, we had a high of 538.75, I believe the high was. And then we ended up kind of correcting under that 500 level. And really the story on the session yesterday was the repricing in Zoom, and just an incredible move there. We're talking a 50% repricing in Zoom in a matter of just over a session. So it was really rather incredible. In fact, in the last 3 months, they had as much revenue as they did in all of 2019. So clearly the demand for video solutions continues with the stay-at-home economy and now learn from home, as many people are still continuing with homeschooling in light of the COVID situation. So we're going to continue to chip away at the long side of the market. We've been trading this fifth wave with our members. We had a trade in NVIDIA, we had a trade in Visa, both of them taking advantage of the breakouts higher, and that's something that is or can be a little bit difficult to do. I mean, when it comes to trading, obviously having the best approach in terms of risk management and a strategy is awaiting your appropriate entries, awaiting those positive risk to reward setups that you can enter with clearly defined stops, with clearly defined wave count and validation levels. But in a market such as the one we find ourselves in, essentially since the March lows, if you were to always wait on the perfect textbook setup, you just simply would never get any entries. Even looking at the Nasdaq here, we have a significant amount of overlap throughout the majority of this impulsive trend, which can make identifying the subdivisions extremely difficult. But until we see the trend suggest that it's coming to an end and that fifth wave is done, we're going to continue trading the upside here with our members. So Nasdaq continues to act well. We do have some resistance up into 12.5. We're just a stone's throw away from that 12.5 target that we've established there in the Nasdaq. In terms of the market internals that we've been watching with you guys, the put-call ratio, or in this case the call-put ratio, given the fact that we've inverted it, we were watching for possible divergence, but that divergence simply never came. The market continues to remain extremely optimistic, and as you can see here in green, we're now actually setting a new extreme in call buying as the S&P establishes a new high. So sentiment continues. The upside market.
A lot of those calls are in Apple too, and that's what's been pushing. I was reading some article that was talking about the number of calls being bought in Apple stock and keep rolling. They keep chasing and they keep rolling it and they keep pushing it, and that's what that just continues to drive the market higher. So.
And now
Todd did a so if you own Apple outright, right? If you own 100 shares of Apple, Todd was telling us about a strategy that he was doing, selling a covered call and then buying a put debit spread. And this was setting up to lock in profits at these elevated levels and limit losses. So there are strategies and techniques that you can use with options. If you have a large portfolio of stocks, you can do covered calls. If you don't own the stock outright, then we'll trade either verticals, call credit spreads, call debit spreads, put credit spreads, put debit spreads, or butterflies, depending upon the wave count formation. So you guys, that's what we give our clients. We give our clients the advice on when to set these up. But like Bennett said, it's been challenging to identify the clear direction because we have different abilities to flex on the market, but we need to use our Elliott Wave and our other tools to give us the highest level of confidence that we're moving in that direction. And so yeah, that the Visa play was good and the NVIDIA play was good. I've had a couple of other plays myself that I took that really did well. So it was a good month of August. We'll get to that here in a minute when I get into sector rotation.
Yeah, absolutely. And to your point, Terry, there have been trading opportunities. Just because we don't have those perfect wave 2 pullbacks into a 61% retracement with a clearly defined invalidation level doesn't mean you can't apply sound risk management practices and still capitalize on the upside that we're seeing here in the market. So again, we're going to continue to operate under the assumption that this fifth wave is not yet complete and that we do still have additional upside. I think one of the most clear signs we had is going back to the first or second week of August here in this wave 2 position. We were tracking this with you guys here on the Elliott Wave Wednesday live stream, and simply taking a look at this fourth wave. This fourth wave was perfect equality of wave 2 of the same degree. And from there, we had an initial motive impulsive 5-wave move. We had a beautiful 3-wave retracement to the downside. And we essentially found support on this continued uptrend impulsive channel. And from there, if one were to look at this 5-wave move as all of the higher degree wave 5, you would be so short of typical 5th wave extensions that it really wouldn't fall in under the guideline of the right look. You would have a very disproportional looking 5th wave relative to not only your wave 1, but your wave 3 and the corrective waves in between. So that was a good indication that we did have that 1.618 upside target there at 12.5 still yet to come. So it's been fun getting into that that Nasdaq and tracking and attempting to identify those subdivisions. It's been a challenging chart. There's no question about it. In terms of the S&P, this is where things get a little bit interesting, and I wanted to present this to you guys here today. So we're going to go back to the weekly really quickly, and we're just going to take a look at our wave count, which originates off of the credit crisis low. So the 2009 credit crisis lows, where we completed what we're viewing as a higher degree wave 4 position. From there, you have a nice motive impulsive 5-wave advance. And this 5-wave advance, a lot of people have a tendency to call this 1-2 and this a smaller degree 1-2. We've been over this with you guys on the show. We try to offer a little education here and there as we can. And for those that are learning Elliott Wave, we identified the reasonings here. So maybe I'll try to get a link back to that show and I'll put it in the description if anybody's interested. But number one, it would be a degree violation. You'd have a smaller degree correction and a much larger or I should say this would be a higher degree correction that is a smaller net percent retracement than if you were to call this a smaller degree 1-2. From there, we have a third wave, which takes us into a beautiful 1.618 upside multiple of wave 1, which is a typical and traditional third wave objective. I think it's pretty clear price action respected that 1.618 upside multiple as we complete this blue wave 3 into wave 4 consolidation. Then we enter this massive fourth wave, what we're viewing as a fourth wave flat. And in terms of equality, this was about, I think it was 8 or 9 days off of being exactly equal to the time elapsed in this wave 2 correction, which is really rather incredible and meets the guideline that suggests corrections of the same degree do tend towards equality. So now, with that third wave extended into the 1.618 multiple, we've got a wave 4 that squares up to this wave 2. I think it's pretty clear those are corrections of the same degree. From there, Elliott wave theory tells us that we should often be looking for equality of waves 5 compared to 1. That being with the extended third wave. That level represents 4,001 spot 42 in the S&P, and that's kind of been our longer term upside target. And if we were to take a look at the wave 2 correction here and the wave 2 correction here, even this wave 2 correction down here, you don't see really sharp directional corrections that are long lasting. They're typically pretty swift and to the point. So with that in mind, could in fact the wave count that we're looking at here off of the March lows be an initial 5-wave move here in orange 1, which if I take you off the weekly and back down to the daily, it doesn't get any more textbook than that in terms of Elliott. 5-wave move, largest net percent correction here in the wave 2 position. Perhaps we are just simply in the process of melting higher towards that upside objective of 4,000 in the S&P. Alternatively, this is just some monstrous B wave rally back and we're going to have a C wave decline into the election season. It's not out of the question, but it's not our preferred count at all. And we'll continue to track both interpretations, but the wave count that we have here really kind of supports the idea that we're pressing into the upper end of this impulsive trend channel. As you can see, price action doesn't spend a whole lot of time over this channel before some sort of a correction enters. So could that progression that we're looking at in terms of a correction over this impulsive trend channel simply be a series of 3-4s prior to resolving in a 5th wave towards 4,000? Absolutely, no question about it. Even with a significant portion of the S&P still being negative year to date, if you take a look at the structure of the various sectors and the weighting of the various sectors, it's really no surprise with the 8 trillion plus market cap in tech leading us higher into these levels. So we're going to continue to trade the long side until we have a good reason to go against it. We'll see what the other guys have to say here in just a second. A couple of charts I want to point out to you before we move into sector rotation is, first of all, we've got Apple. And taking a look at Apple, we've now adjusted our price, the chart here, for the split. So as opposed to seeing ridiculous levels, we've got accurate price data here. So we are getting into upside resistance here in this possible wave 5. So we're going to continue to track that just in terms of overall market sentiment. But in terms of trades, we're watching at Trading Analysis, we're watching Netflix here to the upside. We had a nice fourth wave consolidation into a 38% retracement, looking for 560 to 570 prior to some sort of a wave 2 correction setting in. Likely going to be a pretty swift and shallow wave 2. From there, we've got ROKU. ROKU is another nice looking setup that we've been tracking. You have a nice progression of 1-2, 1-2s that if in fact this is going to resolve into a third of a third, we're going to see likely a pretty shallow wave 2 retracement or correction here before pushing higher towards 200 would be our first upside target. If you've been following our blogs, we put out a blog recently on AMD. You guys know we've been bullish on AMD. AMD's performing remarkably well. This morning in the pre-market, we're actually trading we're trading through the 90 handle. Once again, we pretty much consolidated over 90 throughout the majority of yesterday's session, pushing through 94.20 in the pre-market here, and our next upside target is really that 100 handle. In fact, we've got a trade on with our members taking advantage of that move. So traders, we'd caution you against shorting this market until we really have a good reason to do so. If in fact we do get that correction, which is likely on the horizon, it should present multiple opportunities to trade it based on the Elliott Wave interpretation. So Terry, Alex, anything else you guys want to? Yeah, I'd love to. I'd love to take a look at Tesla.
Everybody and their dog is invested in Tesla, just like Apple.
So
they announced they're going to release another $5 billion worth of stock. Well, they're going to make it available if they choose to sell it to continue to fund Elon's capital needs for Tesla. I saw that yesterday.
Could get interesting. We certainly saw a little bit of profit taking there after the split and that move through 500, which was incredible. So traders, we're looking at a couple of different wave counts in Tesla. Tesla is kind of an interesting beast of sorts in that now that we have the chart adjusted for the post-split prices based on current number of shares outstanding, if you guys remember the past couple of weeks, we were tracking that fourth wave down here. Wave 4 demonstrated equality to wave 2. Again, here's a simple 5-wave move into a largest net percent retracement. You've got wave 3, which was just beyond equality to wave 1. That allows wave 5 to be even greater than wave 3, which would be pretty incredible if that were to set in. But we had an upside target of what would have been 23 to 2400, and we've now met that in terms of the equivalent post-split. And that fib zone is identified here. We also have our 243 trend channel, which did pose some resistance. Now, that doesn't mean that Tesla doesn't become even more fractal. This turns into some sort of wave 1 of a smaller degree. We then progress higher towards upside targets here in wave 3. You know, this particular third wave met equality to this orange wave 1 at 384, what would be the equivalent now post-split. Could we become even more fractal and push towards the upside 1.618 multiple? It's completely possible. I do think that we're going to see some sort of a correction set in here. Once the correction begins to unfold, you should have a better indication as to if that's simply a 3-wave move or if it's going to develop into some sort of impulsive move to the downside, at which point we could be in for this larger fourth wave. That is completely a possibility as well. What do you guys think, team? Any thoughts, Alex, Terry, in terms of Tesla?
Well, The one thing I can see, you got a very directional wave 2. Guidelines of alternation would tend to say there's a probability we're going to have a sideways 4. I think with the rapidity of the price move or the verticality, whatever you want to call it, pushing up, just about every market needs to take time to consolidate and accumulate. I don't doubt that Tesla's got great technology behind what they do, and they've got a great market. But you know, the market does need to absorb all of this move up, and I would not be surprised to see an elongated sideways period of choppy trading and consolidation, attempting to push new highs, failing, but you know, not a total collapse. So what you've got there, extended out a 4v2, or it's really going to be a 4v3 probably.
With how directional that was, yeah, I would tend to agree.
4v3. There's a 1618, and that's out till summer next year, right? So that wouldn't surprise me that we have a period of pullback. So
yeah,
and indeed that I'm continuing to be cautiously optimistic, chasing this market. The one thing I wanted to say about the S&P chart is that if you notice, most typical impulsive moves, the third wave is more vertical usually than waves 1 or 5. But not in the case of where we're at now, because we are in a larger degree fifth wave extension. You'll notice that Bennett's orange wave 3 is sloped more horizontally than it is vertically. Now, to me, this is a sign of a market that is pushing its boundaries. It's a little bit tired. I do believe a correction, although I'm not looking at a major one. I do believe a correction's in the works here. So there'll be some profit taking, some rebalancing portfolio, especially, we talked, I guess, last week about, maybe we did or didn't, I forget, about ExxonMobil being taken off of the Dow Jones Index and Salesforce.com put back on. So all that went into effect this week in the Dow Jones Index, and you can see some different dynamics at play in some of these indexes. But a lot of these portfolio managers, these hedge fund managers, have to rebalance their portfolios at the end of the month, and I think we saw some of that on market action on Monday too. You and I were looking at a couple of things there. So yeah, we'll see. The market needs to shuffle sideways a bit, and I think that's going to go for Tesla and a lot of these other stocks that have just rocketed higher. So no pun intended there.
No, and you bring up an excellent point in terms of the angle of attack, as we like to call it in aviation here in this wave 3. Yeah. As a matter of fact, if we were to just completely hide all of our Elliott Wave labels here and take a look at this initial move, then we have some consolidation. The slope of this advance continues to get progressively weaker, to your point there. So, could that be a series of 3-4s? We'll find out, but until that correction sets in, I'm going to continue to try to chip away at the long side. But all right, anything else you guys want to take a look at before we carry on to sector rotation? Lulu. Oh man, that's one we haven't looked at in a while, but it looks like it's tracking well on its way in that fifth wave. We've got an initial 1-2 here. It looks like you've got a third wave into a traditional, just shy of your 1618, or 50 points or so there, 40 points. We've got a wave 4 here, a little 3-wave correction that squares up to this wave 2, and we're now pushing higher in this fifth wave upside into our upside fib zone here in wave 5. Let me go ahead and fill this in for you guys just a little more. Here's a great example of breaking through our higher degree impulsive trend channel. We broke through it. We have a 3-wave consolidation. We found support, and then we continued on to the upside. So pretty thick zone here between 404 and 447 that I'd be watching there for Lulu.
Looks good. Looks good. Somebody asked about CrowdStrike. I don't think we have a wave count on that. I'm not even sure what the symbol is.
I think it's CRWD. Am I right? Am I right? Are we right? Is it CrowdStrike? We'll see here in a minute. I don't have TradingView pulled up. Let's see what we can do.
It is CRWD.
Yeah, that's what I thought.
The Nasdaq.
Yeah, so taking a look at CrowdStrike, it looks like we don't have a whole lot of data there. Yeah, it becomes a little difficult to establish Elliott Wave counts on such a new name. I think the last clear move we have is this 3-wave move lower. At this point, you would obviously be looking at that upside move as some sort of an ABC until you have evidence to believe that it's an impulsive trend. So kind of looking like some sort of post 4th wave movement here into some sort of a wave 5, but that's a heck of a move from 31.88 in the March low to now 155 it looks like here in the pre-market. All right, guys, anything else you want to take a look at before we move on to sector rotation? We didn't have any time for that last week, so I wanted to be sure to cover that today. All right, Terry, the screen is yours. Carry us on.
Okay, guys, so this is, take a look here on the left here first. This is the price performance chart for the sectors for the month of August. So this is what we've got here. The S&P was up 6.5% for the month of August. The Nasdaq was up 9.5%. So, you know, that just I think, like you said it earlier, the biggest August gains we've seen since 1986. So sell in May, go away. Whoever said that, they were lying to you through their teeth, because it's been a good summer. June was a little choppy, but July, certainly July and August even accelerated through it. And so here's what we've got. So we've got technology. Technology was up nearly 12% in August, followed by consumer discretionary and communications. These are the 3 sectors that I've continued to tell you have been our market leaders. Now, I've also been pushing on materials. Material sector, not quite as strong as it could have been. The S&P was here roughly, but we also saw pretty good push in industrials, although not the entire industrial sector doing well, only certain subgroups in there. So there's your best performers. Your weakest performers, utilities and energy, of course. Let me throw that out of the way there. So that was the month. This is actually represents the current week here, which is 2 days old. And I'd have to reorganize this here for you here in a second, but you can see energy's been down, but technology has been up. This thing doesn't automatically organize this stuff, so I kind of have to manipulate things around to make it look the way I'd like to see it. But you get the idea here. So really, we've got communications slightly up. The S&P up 0.5% today, or from yesterday. So that's where we are. Value and growth, right? So growth stocks have been telling you that they declined for a little bit, and now they were starting to resume or continuing to push back up into the leadership position. The relative strength ratio for growth stocks significantly outweighs that of value stocks. So I do not see the rotation back into value at this time. In our weekly sector rotation, again, we have technology, discretionary, materials, communications, and now industrials. And so what we've been watching over the last couple of weeks here, and I'll animate this for you, is this move in industrials. At this point, it was not really interesting. It is a little bit, it's over here in the improving quadrant, a little bit closer to the leading, but not really interesting. This week was not very interesting because I'm seeing declining momentum. Then I started to see a little bit of a turn of towards the right. So a turning towards the right means that we are increasing relative strength ratio. Okay, so a push to the right, higher relative strength ratio here. Pushing down, though, it is losing a bit of momentum. But I'm continuing to see over this last week, now we see an even sharper turn. So we're seeing a steady momentum with increasing relative strength in industrials. So industrials is now actually positioned to potentially cross over the border from improving into the leading quadrant here in the next few weeks as we move into September and October. On the other hand, the materials sector has been holding its relative strength steady, but it's been losing, declining momentum. Now, technology has also reversed. Technology was weakening, but starting here early in August, technology has regained a vertical slope and is pushing higher. Next week, you're going to see technology right back up here in the leading quadrant. It's going to continue to remain where you want to be invested with stocks that are outperforming the S&P. All these other sectors, there are select stocks that may be outperforming in these sectors, but you should not be overweight in or looking for bargains. Maybe it's a bit too early in some of these. If you're doing any kind of bargain hunting, maybe even financials. Financials is much more deeper down here in terms of relative strength. It's got much further distance to travel to get back over here in the lead, but it does also show an initial turn here. Let's jump over into technology. This is the top 20 by market cap, and I did redo several of my symbol lists. I don't think I added any new ones to this one, but down in the details I did. So AMD, oh yeah, I did. AMD, I know AMD actually bounced back up here into the top 20 in terms of market cap. It wasn't on this chart last week. That's what it was. I knew there was something I had to say. Look at Salesforce. Okay, so Salesforce, like I said, got added to the Dow Jones 30 with removal of ExxonMobil. Salesforce is just rocketing higher here again. 51-degree heading, so it's gaining just as much relative strength as it is momentum. We're also starting to see MasterCard bounce off here, although it's very close to this origin. Anything close to this origin basically is acting the same as the S&P, right? So we do have a handful of tech stocks underperforming: Intel, Cisco, Oracle, IBM. What was it? Oh, Zoom. Was it Zoom? Zoom's market cap now exceeds that of IBM. Did I hear that yesterday, or was I dreaming that? So crazy. Apple's continuing to push higher. I guess they're going to plan to release a new iPhone this fall with the 5G capabilities. That's been long awaited. I'm sure that will push Apple sales revenues even higher. But NVIDIA, nice vertical move. NVIDIA never really losing much of its relative strength. It's just been our outperformer for the entire year in this group. Semiconductors overall. So the story on semiconductors is, while the majority of the semiconductors are outperforming the S&P, the biggest difference that I see here is if you look at the direction of the arrows, I only see a couple of these stocks like AMD, NVIDIA, and maybe there was one other in here. I can't see it. I can't see it now. I don't think so. These are the only two with vertical momentum. The rest of these guys are actually in declining momentum and actually a little bit of declining relative strength. So this does have me a little bit concerned. But for now, relative strength outperforms the S&P. In consumer discretionary, added a couple new stocks here. Hilton came in here. Hilton and Marriott actually running nicely parallel. They're over here still in the improving, underperforming in terms of relative strength, but they are positioning themselves possibly to make a rebound. So if we see some relief here in with vaccines and or other measures, maybe we're looking at the travel industry starting to regain some legs and push back up higher here. Amazon, a very, very small tail. Okay, so again, I talk about this in terms of impulse. So you look at the length of the tail on eBay. This is rapidly pushing lower, but in that same exact time frame, which is 4 weeks, in the same exact time frame, Amazon only moves this far, right? So here's a new stock that also got brought up into this top 20 sector. This is Chipotle. So Chipotle was one of our leaders, pushed down into the weakening quadrant, has hooked in late August, and is now positioning itself to bounce right back up. Could be seeing Chipotle back up here in the lead in the near term. Targets pushing higher as well. Let's look at, sorry, I jumped over to gold first, or gold miners. Let's go into materials sector. So in the materials sector, the real story here, I still think it's the gold miners. It's a mixed bag. 50-50 of these stocks are outperforming or underperforming the S&P. So you have to pick and choose which ones you're looking at. Freeport, Linde, Air Products, DuPont, Sherwin-Williams is a new one here, and then Newmont Mining. But Newmont is continuing to decay in terms of relative strength, so that is a bit of a caution. When I look inside the gold miners index, every stock I've got here is outperforming the S&P, with Sandstorm down here at 110%. So that's huge, and then Sandstorm's actually decaying a bit. So there's a group here. There's a little group of guys that are actually decaying in terms of relative strength, but there's other stocks that are pushing higher collectively. Now, we were following Kirkland Gold for quite a long time here, as I saw it start pushing up in late July. I am seeing a little bit of a hook here, a little bit of loss of momentum in Kirkland. And you can see on this price chart, you can see this sideways performance. This looks clearly like a 1, 2, 3 triangle, 4 possibly working itself out. So
it looks a lot.
Price.
I was going to say it looks a lot like the consolidation we are seeing in gold right now.
Yeah, certainly. So that kind of wave count there, but it's still going to stay in the leading quadrant. It's just this kind of move here is indicative of a period of consolidation. Same kind of thing here. You can see this hook here. Look, there's that period of consolidation. So these are daily charts. The colors are not going to match up to the weekly rotation, but you can just see the price movement there. So here's our communications sector. In the communications sector, these are this Viacom, CBS Viacom, is continuing to increase its relative strength, though its momentum is decaying. So that's kind of interesting there. It's going to continue to be a leader. Take Two had a big reversal. So you can see right here in the blue here, this Take Two pushed up and is reversing higher or lower. So what's going on in terms of price action here? Again, that's a consolidation period. I think last week I drew this. I drew this for my webinar thing, my sector rotation. But this is kind of what's going on with the wave counts there.
How is Disney looking?
Disney stock. Disney's actually now starting to gain. It's in this improving quadrant over here, right? So its relative strength has been slightly underperforming that of the S&P, but it does have a nice heading. It is starting to grow. Let's look at the velocity, 0.89, 0.89. So it's got a steady velocity trend heading in the northeasterly direction. Here's your price chart on Disney. There's a lot of chop here. Disney still has not recaptured its pre-COVID highs. So it's still got a ways to go, but it certainly looks like it's consolidating above the 200-day moving average, 50-day, and the 20-day. Yeah, I think Disney's going to work themselves back out. Now, the one that looks really good here is this Twitter. Twitter has also got a nice northeasterly heading here. So in communications, Twitter is actually sitting slightly above its pre-COVID high here. It had a pretty deep consolidation period, so I don't know what your wave count. If you're calling this a 1-2, then we've got a pretty good push higher in 3-4. Though I'm not seeing verticality again. A lot of this stuff just looks like it's the slopes of the gains here are not in the middle of a third wave movement, but certainly still positive. Netflix we talked about already. or you showed the wave count there. Google's pushing higher, so Google and Charter side by side here, they're actually pushing nicely vertical. In the industrials, it's really the air freight and logistics subgroups that are doing well here. And it's not really the airlines. So Boeing, aerospace, defense. Here is Honeywell. So Honeywell was another stock that got added to the Dow Jones, and that Honeywell is actually in the improving quadrant. I believe you're going to see continued price appreciation here in Honeywell, simply because of portfolio rebalancing. So let's look at the transport. So really, in this transports group, this is what I'm seeing: air freight and logistics, Atlas Air Worldwide. Look how short the tail here is. So not a lot of impulsive decay here. That means this stock is going to continue to. This is just riding very stable. There's the price appreciation since March 13th. Here's the pre-COVID high was at 33, and we're now up here at 57. And then this stock has just been tremendous. What I thought was interesting when I added a few new stocks back into this top 20 list here, I noticed that Avis Budget Group car rentals stock was sitting here squarely in the leading quadrant. I would have thought with the hotel, travel, leisure industry decay, you would never see this. But here's the price. Yeah, it took it from 50 all the way down to 6. But look at the recovery that's happened here. We're back up at 35. We're not back to pre-COVID highs yet. But I'm just guessing that the price appreciation when compared to what the S&P did from here to there is really why we're seeing this guy up in the leading position. Okay, but yeah, I like UPS, FedEx. FedEx. Why is FedEx not on there? FDX. Let me add that back in here. FedEx, FDX. There we go.
Yeah, and FedEx has been acting well.
FedEx, yeah, there's FedEx. I thought I had it in the list, but yeah, FedEx actually has got a nice steady horizontal trend while we're seeing UPS showing a bit of momentum decay here. I think now FedEx might be look at this run here. A nice big huge gap up here in July, 1st of July, and then another breakout, and then the next breakout happened here August 7th, right? So this guy's really been on a run. But it's a late stage breakout, due for a correction, overdue for a correction, well extended. Don't chase it. Don't buy it today. Buy it if it dips, right? So buy it if it dips back down to the 50-day moving average or something like that. So
yeah, I was just looking. I've still got half a long position on from that 125 break. I might be time to take a little profits there in that move in FedEx.
Yeah, for sure.
All right, guys.
Profits and ride your winners. So
absolutely.
Alex.
All right, guys, we're going to go ahead and transition. I know several of you are interested in what's happening in gold and, of course, what's happening in the world of cryptocurrency. Alex, without further ado, take it away, sir. The floor is yours.
Sure. Okay, as always, we are going to look a little bit of different pairs and some crypto developments lately. So, as every week, we are still looking for some potential lows in this dollar index. We were looking for a consolidation in wave 4. Potentially, this wave 4 was already over in some type of a triangle, and now we already have a new low, which is enough for the sequence to finish. But we want a little bit more confirmation before we call a dollar move lower finished. So there is a few possibilities here, because we can also have some type of an ending diagonal, which will extend a little bit. But if we see some 5-wave push and a 3-wave pullback here, we can call this dollar move finished, and then we can look for a pullback to some type of a higher degree Fib levels around 97 or even 99 levels in the next few months. So I think that the low on dollar is approaching. Potentially it's already carved in, but we need a little bit more evidence. Eventually one small push lower, and then we're going to see a reversal in some potential B wave or a second wave pullback in 3 waves. So now we see the dollar move like that for now. And it's pretty the same picture if you look the other currencies. So I will show you a few currencies where you see clearly a potentially 5-wave move over as well. This is the New Zealand against the dollar. A relatively clear wave count. You have a leading diagonal in wave 1, pullback in a wave 2, a nice subdivision in a wave 3, pullback in a wave 4, and now potentially one more small move on the upside. Let me just remove this. Small upside move in a wave 3, 4, potentially one more small push, and I think the big corrective pullback in some type of an ABC on this one will come. Same situation with the Aussie dollar. We can clearly, there is a variation to these wave counts, but even if you do 1, 2, up in 3, 4, and 5, you're gonna get the same wave count. So I think Aussie is also very close to move lower in a corrective pullback. I think that 5-wave sequence is close to finish, potentially one more small move on the upside, and then we're gonna start a bigger ABC move to the downside for this B wave or a second wave of this potential pullback. Euro dollar is actually unfolded as we were kind of thinking through. This was a nice triangle which potentially finished here. To flip back the mirror image of the dollar index, I'm leaving the possibility this is like an ending diagonal, but we are penetrating these levels, and if we go below 170.62 in a 5-wave manner, that will leave us with a possible flat, one more move on the upside, or just a 3-wave pullback and finish of the trend. So I think euro also, if you look from the lows from the 107, its 5-wave sequence is already finished or has a little bit room to go on the upside, but in general I will expect soon a deeper correction in this wave 2 or B back to 113, 114 levels. And that's pretty much picture on everywhere. I was asked by some viewers about the dollar yen. Dollar yen is not going up because it is actually following US dollar, especially with the zero rates. It lost its rate value driver. So we are anticipating possibility that we have one more push lower in this B wave. This is a big WXY, and I will be testing some longs here with the one more move down in dollar and dollar yen. I think it will be a nice entry, so we are going to test this with the possible levels here on dollar yen. Okay, so let's examine a little bit another moves in Japanese yen. So this is a New Zealand Japanese yen, which basically paints the same picture. 5-wave move on the upside is relatively close to finish. I think one more small push on the upside and then corrective pullback in some type of an ABC. We have a nice also a trend line resistance here, so I think that the 5-wave move will finish here and we will see some more downside as the New Zealand dollar will also go into an ABC pullback. So I think slowly some of the short-term positions on some risk-on currencies in G10 space might be interesting. We are looking also this nice wave count in the Euro New Zealand, which is one of the crosses, and very nice deep flat. We are looking for some type of lows, and as soon as the New Zealand dollar puts these highs, we are probably gonna put some long position on this one as well. So many opportunities here, I think, on the FX space are brewing temporarily on some crosses on the long side and on some G10 currencies on the short side. As the gold is concerned, we are still tracking this triangle. So for now, we are moving sideways. But I would like to see a soon push on the upside because I cannot see dollar and gold moving together in this environment, except we see some lower prices on stocks and maybe dollar receive some bid from there. So I would like to see a further consolidation here, potentially even a smaller triangle, a very quick push on the upside to new highs, and then a reversal in this deeper wave 4. We don't have a need to change this wave count yet, as long as this zone here stays intact. Where is our wave count invalidations from the higher degree wave 1 or the lesser degree wave 1? So I would like to see a little bit more upside and then a reversal on gold as well. Silver is still in some type of a small triangle as well. So we don't see anything deep in a question for an impulsive move to the downside yet. So I'm still going to retain our view that silver is also in some type of a sideways small fourth wave pullback with additional push on the upside and then a bigger ABC reversal on that one. Let me just pin this to be visible. As regards of cryptos, we have been discussing various scenarios with our members. Today, cryptos are moving relatively sharply lower, and some of them are 10-11% down, which is kind of a usual thing for cryptos. And especially our attention was this Ethereum wave count that we are having for some time now. We were looking for a possible move down back to this zone from this trend line. We have overshot the trend line a little bit, but then immediately today reversed, and we are now waiting a beginning of 5-wave sequence, still undeveloped here, and we're going to short the pullback possibly for a further move lower, potentially for this wave A. Because there is some evidence now, at least we're going to see a 3-wave pullback, and if our wave count is correct, we're going to see a full 5-wave swings lower here, then a pullback, then another swing down to this potential support, and then we can look potentially for a further upside in Ethereum. Bitcoin is also moving sideways. We are kind of now challenging this potential small triangle. So in Bitcoin, I will also look for a 5-wave move confirmation. As long as we stay in this sideway, I will anticipate potentially one more small push on the upside. But we are on the edge here. I don't want to see this triangle invalidated. So if I see also a continuation to the downside, I will have to call this wave 5 here in a small potential triangle before, and then look for a big flat and continuation down in a wave 3, 4, and 5, where I'm going to put my A wave here, wait for a B wave, and then potentially short the C wave to this 9,000, 8,000 levels, where we are going to look for some longs, because overall we are still staying with the bullish sentiment on cryptos for now.
Very good. Much appreciated, Alex. Terry, thank you all so much. Just checking through the questions, seeing if there is anything that we missed. I think we covered it. All right.
Bennett, you got a special event going on Saturday. You want to?
Yeah, I was going to get to that in just a second. I wanted to bring this chart over as it's not only just a great looking chart, but it's a fantastic example of, earlier in the show, we were looking at the idea that when you have a really sharp and directional wave 2, that you shouldn't necessarily always be favoring the guideline of equality in your fourth wave, which is going to suggest that it's going to square up to time elapsed in wave 2 of the same degree. Oftentimes when you have a very directional wave 2 of a higher degree sequence, you then have a prolonged extended third wave, you often enter a period of consolidation in a wave 4, which wouldn't necessarily square up in terms of time elapsed to this wave 2 back here. I think it's pretty clear based on this wave count here that we have a fourth wave that is significantly extended beyond how long we existed in that wave 2. So that's when we begin to favor utilizing our wave 4 V3 fib time projections to kind of determine when and where that fourth wave might come to completion. Another really awesome example with this chart is, here is a situation where we had Disney consolidate from July of 2015 through May of 2018. And utilizing and looking at this chart through the lens of the Elliott Wave theory, we were able to identify a pending breakout beyond that fourth wave. From here, we've got a nice 5-wave move up here in blue 1, a 3-wave correction. This is actually where we were going long with our members, not only in our options account, but in our portfolios. And another really textbook kind of example that you have going on here is taking you back to the weekly. The corrective move that we saw essentially took us into area of the previous fourth. Okay, so in this particular instance, you're completing a wave 5 of a primary degree. 1 degree below primary degree is your intermediate degree. So if we were to just simply draw a support line back here, you can see that this corrective move into the March lows found support back off of the September 2014 levels. Now we've begun to see a fairly significant recovery effort in the likes of Disney. And when you consider the fact that we not only have Disney Plus, but as parks begin to reopen, we're going to continue to see this name, I think, perform well. If you guys saw the message there earlier from Todd, they've added this back to their portfolio at Ascent Wealth Partners, and I think it's a great looking chart, and I'm very anxious to see how Disney Plus begins to factor in with the park reopenings as we continue to gain some clarity on the COVID front, or perhaps even potentially a vaccine. So just a fantastic looking chart overall. As Terry mentioned, if you guys enjoyed the video, please give it a thumbs up and subscribe and turn on notifications if you're interested in learning when and where we're going to go live next. We're here every Wednesday unless otherwise noted. But more importantly, we do have our summer sale event going on. So I'm going to go ahead and bring up a few links for you guys if you're interested in taking part in that. So you can go to our website, tradinganalysis.com/summer-sale. And then we're actually also going to have a webinar this coming Saturday. You can sign up for that at tradinganalysis.com/summer. And just to show you guys what those web pages look like, here is the sign up page for the webinar. And more importantly, here are the offers that we've got going on currently now for our summer sale event. So deal number 1, we're offering our Elliott Wave Fast Track course at $199. Regular price is $299. You can then, if you're interested in continuing your journey of education in the world of Elliott, you can purchase our Elliott Wave Mastery course. That's on sale for $618, regular price $997. Or if you're interested in all 3 with a 3-month bundle, we've got that actually going at $997 right now, which is a fantastic deal if you're interested in learning more about Elliott Wave and what we do.
That one also includes 3 months of Premier subscription service too, right? So it's not just the course material there, but we want to get you into our community and engage with ourselves and the other clients, and we'll keep you guys informed of what's going on, and we'll help you in your educational path, and it's a great deal. So.
Well, thank you all so much for tuning in once again. We do apologize for getting started a few minutes late, but it happens. It's the world of technology, and with more people using it, as everyone's staying at home, working from home, and learning from home, I'm sure we'll continue to see providers with some growing pains at various ISPs and whatnot. So thank you all so much for tuning in. Be safe, stay healthy. Again, you can check us out at tradinganalysis.com if you're interested in signing up for a trial. Cryptocurrency, Forex, and of course, stocks. Be safe, stay healthy. Terry, Alex, thank you all so much. And members, we'll see you in a few minutes. All right, guys, take care. See you next week.
See you guys.